Australia's economy grew by just 0.2%. That's one of the slowest rates since the COVID lockdowns. There's also lots of uncertainty on a global economic perspective. Some people are even worried about their jobs, and yet property prices are actually rising. How is this even possible? Well, I'm someone who's been a property investor now for over 23 years, and over the last 9 years, I've helped over 500 investors buy investment property all around Australia. And I can tell you, this disconnect, it's not random. It's happened before, and it's not some short-term blip. And if you don't understand what's actually happening, you could end up waiting around for a property crash that's never going to happen. That's why in today's episode, I'm going to share with you why the property market in Australia moves differently to the economy and to what many people actually expect, and why this time is shaping up to be one of the most interesting markets we've ever seen. Let's start with something many people misunderstand, and it's not their fault. You see, many people believe that when the economy slows, then property prices need to correct. But that's not actually how things work in Australia. Why? Because we have a fundamental supply shortage in this country. What that means is we have more people who want to buy property than there are available properties for sale. And this supply shortage is actually getting worse. It's taking longer to build properties than it used to. Approvals out of council are still taking too long, and construction costs are rising. So this is not an easy fix. So what happens when the economy slows? Well, we see economic output reduce, we see inflation fall, and as we've already seen twice so far in 2025, the RBA starts to cut interest rates. Now, while many people might then get affected by global uncertainty, this is the key message that you need to really focus on. While we have a supply shortage, so while we have more buyers who can and want to afford property, even though the global uncertainty might affect a small portion of them, there are still enough buyers, or rather more buyers than available properties for sale, which means that property prices keep rising. Because like my university professor kept drumming into my tired 20-year-old brain, whenever demand is higher than supply, property prices rise. And so when the economy slows, when economic output falls and inflation falls, interest rates get cut, and more people than previously are able to enter the market because their borrowing capacity increases. And in Australia, no matter what's happening on a global front, almost regardless of what's happening in the economy, if someone feels they can afford to buy their own home, they simply will. It's the Australian way. We all want our own home. So that's why in times of economic uncertainty, as interest rates fall, that's often a precursor to property prices rising and rising steeply. And like I said, this isn't new. This has happened multiple times in the past, and I'll share more about that in just a moment. But if you're just starting out and you want help to work out where are the best places for you to buy so you can take advantage of the property price surge that's almost definitely coming, then I've put together a free playbook that you can get by clicking on the link below. You can get both the digital version and the audio version. Now, this playbook is based on my 23 years of investment experience. It's a full roadmap about how to get started so that over time, you can build a passive income through property. Now, if you're someone who's still skeptical about how property prices could rise when there's times of economic uncertainty, let's zoom out for a moment, because periods of economic uncertainty, they're not new, right? We've been through this time and time again. So we have a lot of data to look at, which shows us quite clearly how the Australian property market performs during and just after periods of economic uncertainty. Many people assume that when the world is uncertain from an economic perspective, or it's unsafe, or there's talk of wars, or whatever the case is, the safest move is to just sit on the sidelines and wait and see. But history shows us that if you are someone who is safe in your job and you can afford to buy property, the worst thing you could do is to sit on the sidelines and wait for a crash, because It never actually happened. The last time Australia was in a recession, it was the early 1990s, and The Fresh Prince of Bel-Air had been aired on TV for the first time. Now, according to data from the Australian Bureau of Statistics, the ABS, house prices had been fairly flat around the country before the recession hit. And you can see that here in this graph. The red arrow shows when the recession actually hit its peak. But then look at what happened to property prices shortly after the peak of the recession. During the recession, house prices didn't plunge. In fact, as you can see from the graph below, house prices even rose slightly during the midst of the recession. So it's not as if prices only rose after the recession finished, they actually rose in the midst of the recession. What about during the GFC? Well, according to CoreLogic data, prices did fall about 7.6%, but then shortly afterwards, we had government stimulus, interest rates were cut, property prices soared. And most recently, what happened during the COVID pandemic? Sure, when we were in lockdown, yes, prices fell temporarily, but then what happened? Interest rates were cut, there was lots of quantitative easing or money printing for short, government incentives. What's happened to property prices since the COVID pandemic? And again, every time I came out and said that prices would rise during these times of economic crisis, the comments went nuts. People said I was crazy, I didn't know what I was doing, and that prices had to crash because the economy was so unstable. And yet, every time those commentators were proved wrong. The data shows that during times of economic uncertainty, similar to what we have right now, if you're someone who can afford to, and like I said earlier on, you're safe in your job, you have good job security, now could be the best time to actually buy an investment property. So if the Australian property market rebounding in multiple areas, both during and just after times of economic crisis, is actually the norm, what makes 2025 any different? Well, this time, the situation is even bigger. What I mean by that is this. Interest rates, they're not sitting at like 7% or 10% like they were during times of the previous economic crises. Instead, interest rates are actually already starting to be cut. That's going to continue to inject more confidence into the property market. Then we have massive migration into this country. Yes, it's less than it was during the peak times a couple of years ago, but it's still well above our long-term averages. That's going to keep demand strong, both in terms of needing properties to rent, but also people wanting to buy property. And we have a massive supply crunch. Construction levels are nowhere near as high as they need to be, so we're not building enough properties. The government's target of building 1.2 million homes in 5 years, they're going to fail miserably in that. So this time around, if you're not sure which way property prices are going to go, look at what interest rates are doing. They're on the way down. Look at construction levels. They're not high enough. Look at demand from owner-occupiers, people who want to buy property to live. That's still on the way up. So when you have these three factors all intersecting the way they are right now, upwards pressure on property prices is virtually guaranteed. But you're not going to hear this in the mainstream media. And if you are someone who wants to wait for the media to tell you that now is the right time to invest in property, the odds are that you're going to miss out significantly on the best opportunities. So yes, the economy is slowing, but that doesn't mean the property market is. If anything, the property market is actually breaking away from the economy. It's actually doing the opposite. As the economy slows, the RBA will continue to drop interest rates to try to stimulate the economy, but that's only going to put rocket fuel under the property market, not everywhere, but in multiple key areas around the country where there is already an existing supply shortage, where there already isn't enough properties available for the number of people who want to buy them. Now, if you want to go deeper and you want to know exactly how to invest in this current market, then check out this video. It covers the best strategies, some of the latest data, and some of the biggest mistakes I'm seeing so many first-time investors making right now, and how to ensure you avoid them.